Hello, fellow traders. 'Tis I, the Rumpled One. Today's topic: common sense for traders. I'm sure probably on a daily, maybe weekly basis, you hear somebody talk about common sense. What is common sense? Well, I looked it up in the dictionary. It says common sense, the ability to think and behave in a reasonable way and to make good decisions. Says the more complete definition is sound and prudent judgment based on a simple perception of the situation or facts. So, how would this apply to traders? Well, I think if we, instead of using reasonable, if we use the word profitable, the ability to think and behave, or the ability to think and trade in a profitable way and to make good decisions or to make profitable decisions. And sometimes a good decision would be to end the trade with a small loss. And so sound and prudent judgment based on a simple perception of the situation or facts. Now, those of you who've been following me for years, or maybe just a few weeks or months, probably have seen me say at least once that trading is simple and that the traditional trading education really complicates matters with squiggly line indicators and formulas. And some people say, well, we see you work with squiggly lines on other people's stuff. Yeah, and there's a reason for that. One, I like to learn, and you never know what you might learn. It keeps my coding skills sharp. It keeps my brain sharp, learning something new. And it's about trading, which is something I like. So, back to common sense. The ability to think and trade in a profitable way and to make profitable decisions. Well, let's see if we can apply that. We look at a daily chart here. We can see price was going up and price went down. Now it looks like maybe price is going up again. So, it's Sunday. Markets aren't open yet. How many people will be trading that price is going to go down? Well, they might say, well, you see, there's this trend line here. You can probably put a trend line here. And so price is bumping that trend line, it's going to go down. Other people say, well, we're making higher highs and higher lows, so price is going to go up. And that's why there's a market. One group says it's going to go up, the other group says it's going to go down. Question is, who wins? The real question is do you win? So how would you base your decision on which way to enter the market? Well, what would somebody using common sense for trading? Well, let's go back and let's take a quick look. Sound and prudent judgment based on a simple perception of the situation or facts. On a simple perception of the price or of the price action. Are you with me? And as you know, I like to use horizontal lines. We're still working with the euro, but I switched over to the H1 chart so you can see, and we've got the period separators, so there's 24 hours in a day, so we've got the days. So you can see here, let's just say this is Thursday. Let's just say Thursday, probably my time, I would have probably been looking, let's see here, 1400. Yeah, this is about what time I would probably see the market. So based on perception, if I would have been right here when the market opened, I'd say, well, hey, price was going up at this, price has been going up, so it's like, hey, if it's going up, this candle, H1 candle's green, I'll go long. Oh, I would have only made maybe 3 pips off that trade. Maybe. Maybe I would have had to take a loss when you factor in the spread. Or maybe I would have waited. Because you could see here, well, price got here, it got pushed back a few times and then pushed down even farther. So you see here, this is testing, testing, testing. So maybe it may have been smarter to say, you know what? It seems like price is getting rejected out of this level. Maybe I'll trade this way. So here, maybe I would have waited and said, you know what? This is iffy. If I take this trade, maybe I can make some money. Or I'll say price went up. If it's now crossing the line, I might be trading against the H1 candle color, which would be violating a rule of thumb. But on the other hand, I'd be trading in the direction price is moving at a horizontal line. And so since it seemed like that happened 1, 2, 3, 4 times the day before, and you can see hindsight, it happened 3 times here. But in the heat of the battle, once again, if this part of the chart wasn't there, I'm looking at this part. It goes up, it starts to come down. Based on what I've seen before, that would be common sense. In other words, based on common sense, my simple perception of the price and what happened at this level. Of course, it could have gone like that, but that's not what I saw. We're not talking about what it could have done. We're not talking about the hypothetical. We're talking about what is price doing right now based on what I see. As always, trade what you see. That's just using the simple horizontal lines, sweet spots gold indicator, the one I modified. Or maybe I could have looked at this and said, okay, at this particular time, this would have been the daily high. Oh, it's at the high. What do I know about the high? Well, based on my statistical analysis using frequency distributions, I know that the euro usually trades off the high by about 20 pips. And it usually trades off the low by about 20 pips. That's just the way it happens to work. And you can see here, close to low was 36, high to close was 16. Well, that's pretty close to 20, and that's more than 20. So once again, using common sense based on a simple perception of the price or facts, and I know a fact is it usually retraces about 20 pips off the high and low. So knowing that, if I was here, I would hesitate to enter the trade. Because once again, this is the current daily high right here. So it's pushing. Of course, sometimes people say new highs make new highs, but in this case, it can also do that retrace. So you see, that is just one way to apply common sense to trading. Or I could say, well, right here, it's testing the weekly open. So maybe I would have gone long here and exited out a quick scalp. And here it barely tested it, came back down, tested, broke through again, and came back down. So you can see here it's failed to stay above the weekly open 1, 2, 3, 4, 5 times right here. That's telling you something. Once again, common sense, simple perception. Now, moving on to the next day, you can see it tested it again and rejected it. But this time when it broke through, it had a huge breakthrough. So maybe you were hesitant. Maybe you didn't enter that trade. But once again here, using common sense, you said, well, hey, if it broke through once, maybe it'll break through again. And you could have had a nice run. Once again, common sense, sound and prudent judgment based on simple perception of the price or price action. So, fellow traders, if you have any questions, feel free to reply. I'd like to thank you all for watching and listening and learning. And as always, it's not what you trade, it's how you trade it. I wish you profitable trades the next time you're trading. The Rumpled One signing off.